Boy, oh boy, oh boy. What a crazy market we've had recently. If you've been watching my videos, then you'll know that I haven't really had a good year so far. The markets were choppy for the first few months, and then obviously it's been dumping as of late. Well, until yesterday, that is, which I'll talk about later on. Anyway, this type of action has made it extremely difficult to get any type of follow through on my main setup, which is episodic pivots, EPs. I've had so many trades where they'd run up 1 to 2 Rs and then reverse and stop me out at break even. I don't short stocks, so I've been waiting on the sidelines until the next long opportunity comes along. But the good news is I haven't lost much. My account's only down around 6%, so nothing I can't bounce back from. Obviously, the bigger the drawdown, the harder it is to financially recover. Anyway, despite all the turmoil and fear in the markets right now, I believe that this is a good time to invest for the long term, and that's exactly what I'm doing. I am dollar cost averaging into QQQ, which is one of the biggest and most actively traded ETFs in the world. It's pretty much the S&P 500 without your typical finance stocks, and it's geared mainly towards tech companies. So to spread my risk and to get my timing down a bit better, I'm investing in 3 stages. Anytime I see a big drop followed by signs of support on the daily chart, then I'll allocate a third of my investing account. Of course, I know that I can't time the absolute bottom, and I also know that I'll probably be in the red for quite some time. I mean, just until the market actually recovers, but I'm fine with that. My investment horizon is years, and I don't really need the money right now, so I can sit through this craziness. So I've made 2 buys already so far, and I just want to show you where and why I've decided to buy at these levels. So my first buy was on the 17th of March at £350.75, which was around the $480 area. The reason why I'm mentioning my cost in British pounds is because I can only trade this ETF through my UK broker. As a British citizen, unfortunately, I can't trade US-based ETFs through my US broker, if that makes sense. Anyway, the reason why I bought this here is because we had a long drop down around 12 to 13%, and the downward momentum was getting a bit exhausted. As you can see, it went sideways for a few days instead of breaking to new lows, which indicates that for the short term at least, there's some support. And I kind of knew that another leg down was extremely likely because it's rare that during corrections and bear markets, you get a V-shaped reversal. So I was just hoping for another climatic move to the downside, which we got recently. The Q's made new lows, but it had a little 3-day rally, which probably would have fooled a lot of people into thinking this was anything other than a dead cat bounce. But the volume just wasn't there. And like I said, I was waiting for a climatic move, which happened here. We had 1, 2, 3 big gap downs on massive volume, particularly on the second and third gap down. Now the third gap down on the 7th of April is where I made my second purchase at £327.55, which is around the $415 area. I'll just show you on the 5-minute chart. So the price action on this day was pretty damn crazy. Of course, it had gapped down hard again, and at its lowest point, the Qs were down around 25% from its all-time high, which is pretty significant. So I was watching it for the first 30 minutes or so, and I told myself, if it closes strong today, I might make my second buy at some point within the next few days. I stepped away from my laptop for around 40 minutes or so, and then I saw this huge spike. I was like, what the hell just happened? So I had a quick look online to see what caused this spike, and I couldn't find any news, so I was like, okay, whatever. But it turned out that it was caused by apparently fake news of Trump considering a 90-day pause on tariffs, which I didn't even find out until later on in the evening. Anyway, it's because of this huge spike, massive volume, and the fact that it was getting overextended to the downside, I decided to buy ASAP, providing that I get an intraday pullback, which luckily I got. The last thing I want to do is a FOMO buy into a big rally. My order, it literally got executed 30 seconds or so before the markets closed in the UK, which is 4:30 p.m, so 11:30 a.m. Eastern time. If it was any later than this, I would have missed this day, and I would have had to wait for a pullback, which obviously you don't even know if that's going to happen or not. Yeah, I'm pretty damn lucky to have invested when I did, because after seeing what happened yesterday, I'm not even sure if we're even going to make new lows. So the rumor of a 90-day pause on tariffs, well, it turned out to be true. Who would have guessed? When it was announced, the market had an insane rally. The Qs were up 12% by the end of the day. Now, this was one of the biggest one-day rallies I have ever seen in my 5 years of trading. I don't think many people saw this coming, to be honest. It was all fear, fear, fear. That's all I heard, fear. That's why I don't trade based on news. It's just too unreliable. So yeah, that's my 2 buys so far. As for my third and final buy, I was hoping for another 10 to 15% drop, which would make it around a 35 to 40% decrease from the Q's all-time highs. But I think I might just have to settle at a higher price if this is indeed the bottom. We'll have to wait a few weeks to see how it all plays out. I mean, if we get a low volume pullback followed by a higher low on good volume, then that would indicate the market is probably gonna uptrend. If there is another dump, I don't think it'll be anything more than a 50% drop in the Qs from its all-time highs to its lows. The reason why I say this is because aside from COVID, the most dramatic drop we've had in recent times was the 2008 financial crisis. The Qs dropped around 55% from its highs, and I don't really believe this situation we're in right now is worse than the events surrounding that period. But what do I know, eh? There could be black swan event after black swan event that could completely decimate the markets even more, or there could be a resolution that completely turns things around. No one really knows actually. But anyway, once I've made all of my buys, I'll just ride it out. Whatever happens, whether that be a quick recovery or a long drawn out bear market, I'm ready for it. On a side note, as you probably guessed, I'm strictly following price action. I'm basing my purchases on the technicals that's in front of me, not the macroeconomics. But that doesn't mean I'm not aware of it. Of course, I know the reasons behind this current market drop. I just don't focus too much on it. And if you're wondering why, well, it's simply because there's just too many variables. And we don't really know what's going to happen in a week, month, a year from now. I see so many people getting so worked up over every little bit of news. Trump doing this, China doing that, but they're not really paying attention to the price action. If you just pay attention to the price and the volume, you get a clearer picture of what's actually happening. And this is the way I just like to trade and invest. And in my opinion, if you wait for the fundamentals to improve, economically, politically, or whatever it may be, then you could miss the lows and you'll end up chasing the rally. But that's just my 2 cents. The main thing is, if you're dollar cost averaging into stocks or ETFs, only invest what you don't need in the short term, because you never know how long a recovery could take. And in the case of individual stocks, they may never recover. So I personally would never DCA into individual stocks. I find them just too risky. Anyway, this isn't financial advice. This is just my investment strategy and my whole my thoughts on the whole mess. So that's all for this video. I wish everyone a relatively stress-free experience in the markets during these volatile times.